Sunday, May 29th, 2022, Monaco 64, home of alternative economics and contrarian views. We're going to look at the global chief economist of UBS today, a guy by the name of Donovan. I think his view of what inflation is and the causes and the reasons for the current bout of very high prices proves that the system is going to crash and burn. And do I think Mr. Donovan is doing this on purpose? No, I think he's just been so brainwashed. The economics profession, as Mervyn King said last week in his interview with Sky News, is basically they follow the conventional wisdom and Ph.D. economics or modern economics has failed. And that's not me saying it. It was Mervyn King or Lord King, the former governor of the Bank of England from 2003 to 2013. And I would say Mr. Donovan represents this economics class, these lemmings that are taking their clients, investors, and the whole of society down a cliff of inflation and possibly currency collapse, which of course is hyperinflation. I'm going to play a few clips of his recent presentation or his recent explanation of inflation to the World Economic Forum. I found the video on their YouTube channel. They don't have many views, the World Economic Forum. They have a lot of subscribers, but they get less views than Monaco 64, I would say. But before I start, and many of you have seen this before or heard me say it before, we're going to go through what inflation really is. Maybe some of you are new to the channel and you don't know what inflation really is. So I've got here a couple of things. I've got my Webster pocketbook dictionary. It's the 1973 edition, and it used to be my father's. And after he passed on, I kept it for myself. And we have the definition of inflation. And you notice that I said the definition of inflation prior to Ph.D. economists and bankers taking over, right? And even Milton Friedman, who I don't agree with everything he says, said that inflation was purely a monetary phenomenon. So we're going to go to the dictionary here first, the Merriam-Webster Pocket Dictionary. So under inflation, it says, third definition, an abnormal increase in the volume of money and credit, resulting in the substantial and continuing rise in the general price level. So the reason why I think 1973 is a good year to look at the definition is that we were just coming off a relatively sound money system where the dollar was as good as gold. And you couldn't really inflate the system with currency and credit, or money as they call it, without increasing the supply of gold. Of course, by 1973, that was all unraveling. 1973, we also went into a floating rate exchange system where currencies floated all against each other. But we're just in the beginning of this. And I would say that's a very good definition for inflation. It's an abnormal increase in the supply of currency and credit. And I use currency because what we have today is not real money, right? And I think maybe Merriam-Webster Dictionary should have known better then, but it's still a lot better than what you're going to hear from Donovan in a few minutes. And then I have one of my favorite like bankers, if you can call it that, or economists. Mr. Summary, Felix Summary. He was born in the late 1800s. He was one of the most influential bankers in Europe and even the whole world up until the post-World War II era. And this is what he said about inflation. The state alone is responsible for inflation. Inflation without government or indeed against government is impossible. So there you go. So the state, of course, is the banking sector with the central bank and government. They stimulate fiscally government and the central bank with their commercial banks. They help out in the inflationary process, especially in a fiat currency system. So I'm going to put a link to his memoirs. You can get it for free online, The Raven of Zurich. And that quote is on page 198, just to let you know, if you want to go through it. So now I'm going to play Paul Donovan, and he's done this for the World Economic Forum at Davos. I don't think he traveled there. It looks like he was in his office. So just listen to what he says inflation is, and you decide whether he's right or wrong.
So what is inflation? Is it here to stay? And how do we stop the cost of food and fuel and other vital goods spiraling out of control? Paul Donovan, the chief economist of Swiss bank UBS, joins us to break it all down.
Inflation is the change in prices, generally speaking, but there's, of course, lots and lots of different prices. So the inflation rate that we most often tend to hear about is consumer price inflation, which is sort of this mythical average consumer's basket of goods that they buy. What is the change in the price of that basket of goods? But there's other forms of inflation as well. When we are looking at equity markets, one of the most important forms of inflation is producer price inflation, which is the price companies charge other companies, not consumers, but other companies. And that's because most companies don't actually sell to consumers. Most companies sell to other companies. And then you've got things like wage inflation, which is how much a wage is going up, obviously enough. So there's lots and lots of different forms of inflation. We tend to focus on consumer prices, but in actual fact, you need to be quite careful in deciding what is the most appropriate inflation rate to use when you're analyzing investment decisions or the economy, because it may not be the consumer price inflation, it may be something else entirely.
So there you go. Paul Donovan said that inflation is the consequence, right? He says inflation is the change in prices. Never mention the increase in the supply of credit and currency, right? So is he trying to fool people? Maybe he is, or maybe he's just been so brainwashed into this economics, Keynesian Ph.D. economics paradigm. I mean, even in the 70s, I think it was Stephen Roach who wrote an article recently. He was an economist at the New York Fed from, I think, or the Federal Reserve Board from 72 to 79. And he said that they were giving the same excuses back then. They said that it was oil prices causing inflation and other things. They said that it was strikes and people asking for higher wages. Stephen Roach knows that it's not. Actually, he's recently written this article. But Mr. Donovan, he's in this false economic paradigm where basically he's saying that the wet pavement or the wet sidewalk caused the rain. It's not, the fact that the pavement or sidewalk is wet is, of course, because it rained, right? So he's actually being completely wrong here about inflation. And that's why I think the system is going to crash and burn, because this guy works for UBS. UBS is one of the primary dealers for the New York Fed. Yes, it is a Swiss bank, but there's a lot of foreign banks dealing with the Fed. And he epitomizes the thinking of the economics class in the banking sector, in central banking. And you can bet that they're not like concerned. They think that inflation or rising prices will come down just because they will. So now we go to what's causing inflation. And of course, it's completely wrong because you can listen to the whole video here. I've got some clips, but he never mentions QE, the trillions of dollars of QE we've had since '08. He never mentions the extremely low monetary policy rates that we've had since '08. Basically, we've been at zero or near zero or even negative for almost 15 years. He never talks about that. So just listen to Paul Donovan to see who he blames for inflation or the cause of it.
Well, what we've got at the moment is two different effects coming together to create what's, by recent historical standards at least, quite high inflation, though it probably doesn't last at these levels for that much longer. So the first thing is that in 2021, what we had was a simply extraordinary, absolutely extraordinary level of demand for goods. People were buying stuff. And the reason people were buying stuff was that throughout the pandemic, you'd not been able to go out and buy stuff. You'd been sitting at home. And people were therefore effectively forced to save money. You've still got an income, at least in developed economies, where social security systems provided you with an income, but you couldn't spend that money. So what's the result? Well, the result is your savings piled up. As soon as the restrictions are lifted, you've got a pile of savings that you didn't actually want to have. And you've been sitting at home looking at your interior decor, watching home makeover programs on Netflix. What are you going to do the moment the shops are open? You're going to go out and buy new furniture and refurnish your home, or you're going to redo the kitchen or buy a car or whatever.
So there you go. He's blaming the consumer. He's blaming the saver. He said people had so much money after lockdown, and when the economies reopened, they went out and spent all that, the savings that they didn't need. I mean, to say that people don't need savings is just like so economically illiterate, I think, but that's not surprising. And now to the second cause, and this is a very popular one, of course. He's blaming commodities and oil for inflation. And he says that things were starting to slow down prior to the invasion of the Ukraine by Russia. But you will see a chart that I put on this clip just to give you an idea when commodity prices really started going up. Yes, they have gone up a bit since the start of the war in Ukraine, but it's not because of that, right?
But what's come on top of that is that at the moment when the demand-driven inflation was starting to fade, we have then had the horrendous consequences of the war in Ukraine. And of course, there's all sorts of humanitarian consequences which are very tragic. There is also an economic consequence. And that is that although Russia is not actually that significant as an economy in terms of its size, it's significant in commodities. And so what this has done is lead to higher commodity prices, partly because there have been constraints on supply, either because the planting season for crops in Ukraine has been limited, or because companies are less willing to purchase Russian oil, for example, but also because there's a risk. It's not just that you're seeing prices go up because supply today is constrained. Prices are also going up over concerns that the war will disrupt future supply. And so what that has done is push up commodity prices. And that does feed through to inflation.
So there you go. This is not good. These are the people that really advise banks, central bankers, governments, and they're very complacent about inflation. And yes, he talks about hyperinflation at the end. And I think we could get hyperinflation, but I think he'll be shocked. All these Keynesian Ph.D. economists, they got the 1970s wrong. They didn't think we could have economic stagnation and inflation at the same time. And they're making the same mistakes now. And it's interesting because he didn't give any solutions to the inflationary problem, which of course would not be really good for his banking colleagues and the banking world, because the solution is really to go back to a sound money system where there's a monetary anchor holding the currency, so to speak. And of course, he never mentioned the extremely or extremist, really, monetary policy, the Bernanke QE helicopter money policy that we've had since '08, because we really need to reverse that. But that's almost impossible now, and that's why every day and week that goes by, the more convinced I am that we're gonna see everything crash and burn. Unfortunately, and that's why you do need to have a little bit of insurance outside the system, in my opinion, a few silver and gold coins if possible. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And I wish you all a great rest of the long weekend in the US and everywhere else around the world. Take care. Bye.